Welcome to the What to Watch video update. Every week I do a number of different videos. I do a daily video, I do a weekly video. Every week I do an intermarket analysis video, and then a thing I call the deep dive video. And then at the very end, I go through all the charts that seem to be saying something right now, and I put them together in this video. And I come up with a positive list and a negative list. Now, some of these could be on both lists, but we just kind of look things over to say, okay, what are we really following right now? The real key to success in the stock market is not just watching one or two little indicators. You need to have a grasp of the big picture at the same time, because what may be happening in other markets could eventually have some kind of an impact on the S&P 500. So I look at as much information as I can, and then I use the consensus method to come up with, okay, are we positive or are we negative? Realizing that everything is not going to look positive all at the same time. In fact, when it does, that's usually when we've hit a top. Not everything is going to look negative at the same time. When it does, we've usually hit a bottom. The market likes to climb a wall of worry. So even though we're looking positive, there are still some things to be concerned about. We want to respect those things and watch them and see if they're coming into play to turn things more negative, or if we're looking negative, if some positive things are coming into play to turn things more positive. All right. Before I get started, I have a thing called the SPX investing program. It's now up, it's running, and it's free until the end of 2024. There are additional videos that I post there. There's a link that will take you to the website below this video. There's also a link to another video that talks about the program. If you have any questions, you can email me right here. We could set up a time to talk if that's something that you would like to do. Also, the daily video is the real foundation of the analysis that I do each week. This video, the deep dive video, the intermarket analysis video, the weekly video, and the what to watch video that you're watching right now, this is a supplemental video. Everything is meant to tie into the daily video. And then since I did mention supplemental videos, there are additional videos that I post from time to time on the website that I don't make public. So you can take all of this together and get a really good grasp on what's happening with the market. First of all, let's go through and look at those things that are deemed as positive right now. The first thing we want to keep an eye on, this is positive, but we're also a little bit concerned about this. This measures the trend, the condition of the trend right now. When this dark black line is going up, that means we're in a stronger trending environment. The trend is getting stronger. It's not measuring direction. It's just measuring, is the trend getting stronger or weaker? To give that a little bit of context, I put a shorter term moving average on here. Well, you can look over on the right-hand side where we're below the moving average. We're trying to turn back up, but we would be more confident if we were above the moving average and the black line was going up, even though it's trying to do that. Now, another thing that we get from this, are we looking positive or negative? The green line is above the red line. So we are positive here. You'll see this blue line going across right at the level of 20. That's a static number that I came up with after years of research. Some folks use 25, they might even use 30. I settled on 20 when it applies to the S&P 500. When we're below this line, that means we're in a non-trending environment. When we're above this line and we're above the moving average with the ADX, that means we're in a strengthening trending environment. And since the green line is above the red line, we're still in a positive environment, even though the trend is not really strong right now. And you can see what's happened over the last number of trading sessions. We've been pretty much chopping sideways, and that's why the ADX is not really picking up a strong trend. This is the chart that I focus on the most. The first chart that you saw is short term. This is intermediate term. The same thing. We use the ADX, whether we're above or below the moving average, whether above or below 20. We're still above 20, but we're right on top of the moving average. But we still default to positive because the green line is above the red line here. But we're concerned about this because we're not really trending right now. This would be better if we could really get some kind of a trend really going. This is typically positive, and I kind of bunch it up together with the ADX chart. So Really, this is more negative. We are dropping well below average with volume. This is a volume oscillator. And even though Friday had the most important economic report of the entire month, and it was taken as positive, we were below average with volume. That's a little bit of a concern. When there's a lot of conviction, we see an increase in volume, whether that's to the upside or to the downside. We went up on Friday on a decrease in volume. Now, is that a huge concern? Not really, but it's something that we do want to be aware of with the market. I'm not even really focusing on the 50 or 200 period moving averages right now because we are still above the 20 period moving average. And the lines are going up and prices above both of these lines. So our short-term trend is still positive. This is another way of looking at the short-term trend. Going from 10 periods up to 50 periods, we're above all of the lines in this rainbow here, and price is above the lines, and the lines are going up. So that also confirms that the short-term trend is positive as measured by moving averages. This is another moving average study. We're above all the different plotted moving averages on this chart. That means we are positive. We're also looking okay here with the advanced decline line based on price. Now we look inside of the S&P. Now, one thing that is encouraging is we kind of blipped up a little bit on Friday based on price. We turned up a bit more based on volume. That could be positive. Now, we have to ultimately follow price, but sometimes volume can lead price either higher or lower. So even though we were below average with volume, the volume that we did see was more positive than the move up that we saw in price. We're above advancing moving averages, both based on price and volume, so this is still positive. Another internal measure, the new highs minus the new lows. We see an awful lot of green here, but we're falling back a little bit. We're not really setting a lot of new breakout, new highs right now. So that's causing our 5-period moving average to go sideways, and we had been declining and we're starting to flatten out with our 10-period moving average. In a more positive environment, we want to see both of these moving averages going up, and we want to see a continual expansion of the new highs. But this is still looking positive for right now. We also look at accumulation distribution, which is a smart money indicator. It not only takes into account movement of price, it also calculates volume into the whole mix. When we're above the red line, which is a moving average, we're positive and we're moving up, and the moving average is also going up. We like to keep an eye on how far away are we with the indicator from the moving average, and that's this other indicator down below. We're not necessarily getting an extreme reading right now. Another thing that we look at is short and intermediate term advanced decline ratio. Even though we've been falling lately, we're still above zero with both the blue line and the red line. Chaikin money flow, another smart money indicator. We were getting a little bit concerned about this about a week or so ago, but we're seeing some improvement here. Even though we were below average with volume on Friday, we saw this really pick up, and we're seeing the red line going up. So this is more positive. And the Chaikin oscillator, which had been chopping sideways, actually started to go back up. That's positive as well. The vortex, which had been coming down with the green line and coming up with the red line, that was giving us a concern, but we did turn back up with the green line and we went down with the red line on Friday. If that can continue, this would remain more positive. We look at an intraday chart of growth of value for the S&P, and this is actually looking okay right now. We're seeing a gradual move up here with this intraday ratio. We want this to continue to go up if we're more positive on the S&P. We want growth to outperform value. This is an end of day chart, also showing an improvement with the growth of value ratio here for the S&P. So this is not looking great, but it is looking better than it was. Large cap growth is still doing good. We're above all the plotted moving averages here. And we're seeing a real nice improvement here. When we look at a ratio between discretionary and staples, this is really breaking out right now. And that's kind of another form of growth versus value. And that is quite important. And to see this continue to improve would make things continue to be more positive. Stocks above their 20-period moving averages. We were declining. Even though we were declining, we were still above 50. That's the line between positive and negative. In Friday's session, we did come back up. If we can keep going up with this, that would remain more positive. And we look at The advanced decline line on a cumulative basis for the S&P, where we ticked up a little bit on Friday, but you notice how we ticked up more based on volume. That could be volume leading price higher. Now, it's not always a positive sign, but quite often it can be. Then we look at the new highs, new lows. This is the daily score, and we're above zero. So that's positive. And then this is a 50-period moving average, where we are, for the most part, continuing to go up here. Then we look at the broad market. Now, I focus on the S&P 500, but then a broad market measure is the NYSE. This is a cumulative advanced decline line based on price here. And this is really breaking out to a new all-time high. And that's more encouraging for the broad market. Even though we didn't see a real corresponding tick up here with the regular NYSE advanced decline line. Here's another NYSE advanced decline line, which is calculated in a slightly different way, also showing some improvement here above the moving averages, and the trend is up, so that's positive. And then we break it out based on common stock, based on price here. We went up, and we actually are setting a new all-time high here based on volume. That's also positive. Then another indicator is called the bullish percent index. This is not moving average based. It's not an oscillator. It measures the point and figure buy or sell signals inside of the S&P 500. We had a really high reading up here. That means the S&P was really strong across all the stocks, the 503 that make up the S&P 500. Well, we were starting to come down, which was a concern. Now we went back up after Friday. If this stays at a high reading, that would be positive. If we start to decline and eventually fall below 70, that would be more negative. We also follow the bullish percent index for the NYSE, still getting a very high reading here, suggesting good strength right now across the broad market. The NASDAQ 100 bullish percent index. This is where the Magnificent Seven stocks are at. They're also in the S&P 500, but it's more pronounced here in the NASDAQ 100. We were declining, but we are starting to go back up, and we're still above 50. That's also the line between positive and negative. Looking at the advanced decline line across different indexes here, we're looking good with the NYSE common stock, the S&P 500, the mid caps, and we bounced off the moving average with the small caps. So even though small caps are still lagging, the fact that they bounced up above this moving average is encouraging. Now we look at bonds versus stocks. So when this ratio is going down, which is what it's doing right now, that means that stocks are outperforming bonds, or bonds are underperforming stocks. And this is more positive for the S&P. We'll look at the NASDAQ. It came right down to this pivot point and was able to bounce up off of that. We're still in a longer term uptrend, and we're above the 50-period moving average. NASDAQ 100 also came down to this pivot point and bounced up off of that, also above its 50-day moving average. But you'll notice here, we still have a ways to go to get back to the all-time high. We're just coming off of setting a recent all-time high with the S&P, and we set an all-time high with the Dow on Friday. We look at a ratio between the NASDAQ 100, or the QQQs, and the IWM, which are small caps, and we're right around this really high reading right now. We're at this blue line, so that's holding up for right now. The Wilshire 5000, a broad market measure. This is a daily chart. We didn't set an all-time high this past week, but we did in the previous week, and we're still looking good, well above the 50-day moving average. The blue line is above the red line. The red line is the 200-day moving average. This is another broad market measure, the total U.S. stock ETF. Not an all-time high here, but above its 50-day moving average, and everything is looking good with this chart for right now. The financial sector doing quite well, and that just bodes well for the market doing well additionally there. The FANG index is doing okay above its 50-day moving average, but still has a ways to go to get back to an all-time high. The big mega cap stocks, the ones that really led the market higher over the summer, they're lagging right now. And it's the rest of the stocks that don't have as much of an impact on the S&P that are doing better, but they don't really drive the index higher. Then we look at a ratio between the S&P 1500, which is a broad market measure, and short-term bonds, 1 to 3 years. We're coming up out of the rainbow, not at an all-time high yet with this ratio, but we're looking pretty solid there, showing how the broad market is outperforming short-term bonds. Here's another broad market measure looking a little further out at 3 to 7 year bonds, also looking pretty positive right now. We look at the tech sector with 3 to 7 year bonds. not coming out of the rainbow much yet, but we are showing some signs of an improvement here after we saw some weakness. We look at a ratio between the NASDAQ 100 and the Dow. Now, the Dow just set an all-time high. You would think if that's true that this ratio would really go down, but the NASDAQ 100 is still holding up fairly well with this ratio. A weekly chart of the NASDAQ 100, we're still above this long-term trend line going back to 2009. And when we're up above the rainbow like we are now, this is the market anticipating a soft landing, meaning that we're not going to go into a recession. And the market's been pretty convinced of that. We saw some weakness over the summer. This was the big dive at the beginning of August, and then we were chopping around a little bit. Now the market seems a little bit more convinced. We look at home construction with 3 to 7 year bonds. Even though this is coming down, this is still looking pretty solid. This is a very highly interest rate sensitive area. So the fact that this is performing quite well is also positive. We look at a 10-day average of the S&P 500 highs minus the lows, getting a very high reading. This is more intermediate to even a little bit longer term positive for the S&P. And we look at a broad market measure of a 5-period moving average of the highs minus the lows, also coming down a bit here, but still above zero. And we look at a weekly chart of the S&P 500, we're well above this R2 pivot level for right now. So longer term, we're also looking pretty good. The ratio between semiconductors and the Dow, we've been coming down a little bit, but the last, especially on Friday, last few trading sessions, semiconductors have been doing a little bit better. It would be even more positive if this ratio would continue to go back up to this blue line. If we really start to fall, that would turn this ratio more negative. Now we look at the negative things here. We're a little bit concerned with the VIX. We closed at 19.21. That's getting close to this 20 level here. When we get up into this red area, that's when we see negative annualized returns. We want stocks to go up and the VIX to go down. And then the further down we go with the VIX, the more the annualized return is, the more positive it is for the S&P. So we're a little bit concerned about this. We're also a little bit concerned about the VIX. It's getting above that 20 level. We went above it after Thursday, but we came down below it after Friday. Both with the line chart here, that's the closing value, and the bar chart is also still hanging out a little bit below 20. If we see more weakness, we're really going to see the VIX go up, and that would be more negative for the S&P. The VIX of the VIX, which is the volatility of the VIX itself, when the VIX goes up, this has a tendency to go up as well, even though it did come down in Friday's session. This is a correlation between the VIX and the S&P 500. We're not getting a signal right now, but we've been getting some very low readings. Now it's starting to go back up. When we will really pay attention to this chart is if we go above the dashed line. And sometimes we're picking up a really nervous market when this happens without the VIX necessarily telling us that. So we just want to keep an eye on this chart. This we've been watching for about a week now. This is a variation of the VIX called the skew index, and it's been hanging out in this red area now for about a week. It got to a really high reading up here, started to drop back, and now it's going back up. Now, we don't really know the direction of the move, but the market is expecting something big. And you can see other times when we spiked and then came back down. Sometimes that was the top, sometimes it was the bottom, sometimes it was just a continuation. So we don't use this chart all by itself. We use it in conjunction with other charts. We had been going down with the momentum of the VIX. Now we're starting to go back up, and that's more negative. And even though we're seeing an improvement here, when we look at intraday charts of large cap growth versus large cap value, we still have the red line above the blue line. To be more positive, we want the blue line above the red line, even though they're on different scales. The McClellan oscillator has dropped below zero. That's negative, even though we bounced up a bit on Friday. Now, this is for the NYSE here. We want this to cross back above zero to be more positive. Here's the summation index for the NYSE, also coming down based on price and rolling over just a little bit based on volume. That's slightly negative. We want to keep an eye on jobless claims. We have been going down with the moving average, and we had a pretty friendly report on Thursday. We want to see if that's going to continue in the upcoming week. We also want to keep an eye on continuing claims. As long as this moving average is going down, that's more beneficial for the economy. And then we did get an update of the unemployment rate, which is now down to 4.1%. And then I put the initial claims and the continuing claims on this chart just to give it more context. The S&P McClellan oscillator is also below zero. That's negative. It would be more positive if we could come back above zero. So the summation index based on price is going down, but we're actually potentially flattening out based on volume. So if volume is more positive right now, this could actually be starting to turn before price does. Doesn't always mean that. Sometimes this little change that we see here gives us a false signal, but we still want to pay attention to this anyway. This is more negative too. We are below zero with the Swenlin trading oscillator based on price. We bounced up off of the zero line based on volume. So that could be positive that way, but the fact that we're below zero based on price is negative. Parabolic SCR. This is a primary indicator that I rely on heavily. We switch to negative. When the dots are underneath, that's positive. When the dots are on top, that is negative. Now, if we break out and set another new all-time high, we could change this back over to positive. But for right now, we don't know if that's going to happen. So we have to go with what we're seeing on this chart, and that is negative. And we're starting to show some deterioration with momentum. In the short term, we're rolling over. In the intermediate term, we're rolling over. We're not really crossing over negative yet in the long term, but we are seeing a little bit of weakness here. And we're seeing a negative divergence. The equal weight version of the S&P is just coming off of setting a recent all-time high. We still have a ways to go with the equal weight version of the QQQs to set an all-time high. Now, the fact that we're setting a recent all-time high, that's positive. But the fact that it's not being confirmed by the QQQs, that is a negative divergence. And the momentum for the NASDAQ 100 has come right back down to the moving average. If it crosses below, that's going to switch the momentum over to negative. If we can keep going up with the NASDAQ 100, this will turn back up and become more positive. Small caps, they've just been chopping all around. They go up, they come back down, they go up, they come back down. I just put it on this side here because we're not really breaking out yet as far as the small caps are concerned. This is another look at a small cap index called the Russell 2000. We did cross it back above 50 with the RSI. We're still above the 50-day moving average, but the momentum continues to be negative. And small cap growth of value, not really showing any improvement. Mid cap growth of value, not really showing any improvement. Now on the positive side, I had S&P growth of value. That is looking a little bit better, but in some of these smaller stock indexes, it's not really showing an improvement. We look at a growth versus a value ETF. We came all the way down and actually dropped below this black line, which is a 250 period moving average. We're bouncing back up, but until we break out and really show some strength and get above the rainbow, I'm still treating this more as negative. The mid caps just pretty much chopping sideways. Even though they're positive, they're above their 50-day moving average. They're not really showing a lot of strength currently. And here is a look at the Elder's Impulse system where we went from neutral back over to positive, but I'm a little leery of that one. We look at the ratio between the staples, which is defensive. When this is going down, that means the tech sector is outperforming. Well, we've seen a recent golden cross, meaning staples are starting to be in an uptrend compared to tech. Now, this is coming back down, but until we really start to decline more and eventually see a death cross with this ratio, this is still cautious. We're very cautious of this, and it's more negative. And we had been coming down with the 10-year yield, but we really spiked up on Friday. Now, that didn't seem to matter to the market. It wanted to go up anyway. But if interest rates get up over that 4% level, the stock market may go, oh, wait a minute. We shouldn't be going up. We shouldn't be buying. We should be selling. So we're just going to be watching to see if that happens. And we're not seeing much of an improvement here, a little bit with the Qs to S&P. We were seeing a lot of improvement with discretionary to S&P, but then that really fell back. And we're not seeing much of an improvement when we look at large cap growth versus large cap value. We want all of these to be going up to be more positive. The fact that we're not really showing a lot of improvement here is a bit of a concern. So with the large caps, the mid caps, and the small caps, we're above the moving average slightly. So it's not like these are falling apart, but they're not performing as good as we'd really like to see them perform right now. The S&P to utilities ratio, we want this to be going up. Overall, this has been going down lately. And staples to S&P, we want this to go down. It is going down now, But we want to keep an eye on the staples sector because it's been doing very well lately. And so if that really starts to improve, that could really affect this overall ratio. And then we want to keep an eye on oil. Just a week or so ago, we were down around the 65 area. Now we're up to around the 75 area. And this is mainly going up because of geopolitical events. And that's why I couldn't do this video a week ago, because I was in Jerusalem at that time. I was getting things ready for this video. And then some bad news came out, and I said, okay, I got to get out of here. And it took me 4 days to travel back to where I currently reside. So that's why you didn't see this video a week ago. And if we do see an escalation of things in the Middle East, oil is probably going to go up, and that could put some pressure on stocks. The dollar just really screamed to the upside here, even though it's still in a downtrend overall. And then we have this thing called the Hindenburg Omen. So far, it hasn't really mattered. We do have a confirmed signal. When we see two spikes within 20 trading days, yeah, it's confirmed. And before this mattered, this is right before the COVID crash. This is right at the end of 2021. So it can take some time for this to play out. We're just wondering if this is going to develop into anything. And the more spikes we see, the more we need to pay attention to it. Now, the perma bears, they declare everything done and finished when they see one spike up here. At least a couple perma bears that I just look at the headlines for their emails. But this is more confirmed. And if we see another spike up here, it'll be confirmed again. So we just need to respect this for right now. So thank you. I hope you have a really good weekend, a great week, and I will talk to you in the next video.